why successful traders have strict risk management and control over their emotions. I'm going to talk you through an analogy of a rider and its elephant. Okay, and you think, well, what's this got to do with trading? It's quite straightforward. Um, Essentially, the human brain is comprised mostly of emotional sort of content, in that this is a big part of our everyday experience, and we rely on emotions because from caveman times, we have the fight or flight mechanism where emotions just take over, and we lose our analytical, rational side. And with trading, it's very easy to become emotional. So this is one of the reasons why you'd need risk management, because you'll exercise control over the elephant. Right? This is the emotional part of your brain, and this is you being in control. Okay. And without risk management, you've lost your rider. The rider will fall off, and then you become fully subject to emotion. So you need to be on top of the emotion, the emotional processing of anything that you do in trading. So this is your analytical, rational part of your brain, and this is the emotional side. And you see which one has got more strength. It's the elephant. Right? That's the driving force. Whatever happens for the rest of your life, this is always going to be in control of everything, because we're human beings, we're emotional. But if we exercise control, then we have mastery over that emotion. Right? So the elephant is irrational and driven by emotion and instinct. So what they'll want you to do, they want you to be fearful, and they don't really want you to be in control of those emotions. And this is why the news comes into play a lot, and there's quite a lot to do with sentiment analysis, especially for herd behavior. But this is just for a individual advice consultancy for your individual trade. Okay. Perched atop the elephant, the rider holds the reins and seems to be the leader, and seems. Okay, but the rider's control is precarious because the rider is so small relative to the elephant. Anytime the 6-ton elephant and the rider disagree about which direction to go, the rider is going to lose. Is completely overmatched. If they invent a risk story, your emotions will take over, because that's just what, we're human beings. So, and it's, if you see something that's particularly scary, this guy on top is going to be thrown off, and this will go on a stampede, and it will take over your trade. So this is why you need risk management. Now let's observe the US 500 this week, the S&P 500. Okay, so we had a big risk-off move, huge, and then Tuesday, Wednesday, today. All right, so you can understand how the elephant would be taken over, because that's quite a scary move. That's like a euphoric move, scary move, and so it puts you in like an unease, where the rider isn't really sure about which direction, and if the rider's not sure about the direction, the elephant can go either way, and it can even throw off its rider. So price is engineered to throw investors off their elephant and evoke fear. Now the thing is, S&P, it's not really going to tank, because we know from a sentiment point of view that we are risk on, because the retail guys are very bearish on indices. And so if it did fall, it would mean that these guys get paid. And because the retail majority are often wrong, it would be unusual for price to fall. So we would need to have on our rider an appreciation of sentiment analysis. That's important. A lot of the time, going back to the rider, this guy isn't really sure about direction. And this is what the banks want. they don't want this guy to know that the S&P is going to go up, because if they did, then it's going to like teeter the balance. But by having sentiment analysis, you'll know with a quite good degree of confidence that the S&P is going to come up for the reason that the dumb majority are short. And if the dumb money flow is short, then price is going to come up. Okay. So the price is engineered to throw investors off their elephant, invoke fear. So we had some scary Middle East story. Then we had the Biden flexing his political muscles. And then what was the? Oh, we had the Fed tapering. That was here actually. And then that was just a scary news event. It was like a non-event. Perhaps it was priced in, and so we came up. So it's a perfect example how you'd be the rider would get thrown off the elephant, and the elephant would be in control, and then that's why you're subject to emotions. And you think that you're being like smarter than the market by removing your stops, but what if it continues and it goes wrong? So the only thing we have full control over is risk management. That's the most important thing I could probably ever teach you as a trader. So we've got a good idea about direction using sentiment analysis. We can use technical and fundamentals, but no one really knows with 100% certainty what's going to happen tomorrow. But the only thing that you can control is the rider. And this is applicable to anything in life. As long as you've got control over the emotions, you're about to see clearly. And you need to be aware of those outside exterior forces working on your mind, i.e. news events and fear-mongering and social media. So as long as you sort of know that that you've got control over your emotions, then you're not going to let things, exterior forces, bombard you, and you keep strong. And that's why you want strict risk management, because it's the only thing you can control. Right? S&P up and down, up and down, up and down for infinity, but this is a constant. And if you have this as a constant, then you'll succeed. However, you will get stopped out from time to time, but that's fine. That's part of trading. Okay. So without risk management, you'll succumb to emotions since you lost your analytical and rational edge, the rider. And this is exactly what the banks want. They want you to be fearful, so you're all trading emotionally with wide stops or no stops at all. If you don't have a stop on the S&P and you're short, and that's going to be incredibly painful for you, because we know with a fairly good degree of confidence it's going to come up because the retail guys are really short. All right. So you will all know how destructive it can be when you let losses run. And I think probably a few of you have blown your account up and you let losses run. But I think perhaps what you could still be doing, you're still having slack risk management, and that's why you're losing money. Even though in hindsight you did this one thing and it cost you, but you're repeating that thing. You're not having good strict risk management, and this is why you need the control of the emotions. Okay, so you might be repeating the same mistakes, but the reason for it is because you're not doing this. You've probably got thrown off, and the emotional elephant is stampeding, and you've left. The emotions have taken over. Okay. So that's key. It's a behavioural change, and what you'll need to do is just simply, if you've done something that's cost you, don't repeat the same mistake. And the only thing we got control over is the risk management. So going back to the elephant and the rider analogy, by owning a strict risk management gives us mastery over our emotions and control over our trades. Admittedly, we'll be stopped out from time to time, but we'll never ever incur large losses. So instead of having, if you're trading the Dow Jones and you decided to short it a few years back, you would have blown your account. Even with a huge account, you would have got blown up. So this is why you really need control over this part. Okay. Uh, you can apply this logic to any type of behavior, whereby having control over your emotions give you a clear-sightedness and confidence for the path ahead. So this is what you want: clear view, no emotions, know that there are external forces working on you to try and coerce the elephant. Okay, and you need control over this, and you need to be aware that there are things out there that's trying to influence this. All right, and to summarize, you don't ever over leverage, and you risk over 3% on the trade. Do not over trade. Keep everything to a minimum. I think a couple of you guys in the QuasiDB service are over trading. You don't need to trade really more than 3 pairs, really, because if you are selective, then you can have more focus, and with more focus, then you've got clear-sightedness. If you are over trading, then this elephant is going to go back and forth, back and forth, back and forth, and you're going to get tired and stressed as well. And another thing about having the strict risk management is that if you get stopped out, you don't worry. It's just a fact of trading. And another thing is probably you don't really want to be trading tired, because the rider will be prone for falling off the elephant. And I dare say this has happened to pretty much all of you. You've traded, perhaps you've just woken up in the morning, you're not fully alert. This is in full control because you've been asleep. And in fact, this has been it's been rampant for the whole time you've been asleep, hence your dreams. You've woken up and you've opened your mobile phone, you think, oh, that looks like a good trade. And you click buy or sell, but you haven't really fully woken up, and you were never really in control of the elephant. And so that from the outset of the morning, you're going to be slipping off that elephant and falling off. So it's very important that you are fully alert when you're trading, and you don't trade tired, and you make mistakes. And so that's it. So hopefully that was a good video. I thought about the elephant and the rider analogy because I was looking at Wikipedia late last night, and it's quite a good analogy, and you can apply it to anything in life as well. So if there's anything that's causing you fear, you can control that. Perhaps I've got a fear of public speaking, for example, but if you know you've got control over the emotions, then you have mastery over that fear, and you can overcome anything. So hopefully it's a good video. I can do some more trading psychology videos whenever I think of good examples, and hope you have a good day. Hopefully it helped, and I'll speak to you soon.